Yo, what is going on? It's Lewis here, the crypto beginner, and in today's video, we're going to be going over the MACD indicator, which is an indicator you could use that will help you determine whether or not it's a good time to buy a coin and get into or out of a trade. Now, before we start, just a quick disclaimer, I'm not a financial advisor and nothing in this video is financial advice. Always consult with a professional before making financial decisions. Investing and trading is risky, especially in the crypto markets, and no one indicator is a guarantee of future events. So with that out of the way, let's get to the video. In this video, I'm going to be using something called Coinigy. It is a free software. You just need your email address and you could put a lot of different emails in there if you don't want to pay for it. You could also use TradingView, which is another software. Basically, these are just softwares that professionals like to use to give indicators and use their technical analysis on graphs and charts so that they could chart out the different graphs and they could decide whether or not it's a good time to buy a coin or when the best time to buy and sell a coin is, how long they want to hold a coin for, and pretty much everything they need when it comes to making trades. Now in Coinigy, you can link up your actual account, your exchange, to the Coinigy software and then do trades just from there. I don't really like to do that. I don't feel comfortable doing that, but it is still a great tool to use to help you determine whether or not it's a good time to get into a trade. And you do this by using technical analysis, which is that support and resistance, it's the MACD, and it's something called Fibonacci, it's a whole bunch of stuff. So let's just go into this. As you can see, this is the Coinigy platform. On the left-hand side, there is a list of all of the different exchanges, and on the right-hand side over here are the list of different coins. Above here, you could put in the three-letter ticker of whatever coin you want. Right now, I have BTC or Bitcoin, and I clicked the Bitcoin USD pair, and I have this for the GDAX exchange. So that is what comes up right here. And as you can see, this is the graph for the Bitcoin USD pair regarding GDAX exchange, and this is the current price it's at. And what I want to do is I want to add an indicator. So I'll go up here to the indicators tab and I'll click that and I'll type in MACD and I'll click the MACD. Now the MACD stands for Moving Average Convergence Divergence. Now one thing to know about the MACD is that it's best used on the daily chart. So you could see up here I have the 1 day chosen as opposed to the 1 hour or 5 minutes. You can use it for the 1 hour and sometimes I do that, but the 1 day really gives you a much more powerful and accurate representation of where the market is going. So when I put in the MACD, nothing actually showed up on this graph, but it did show up down here underneath the graph. That's where the MACD usually comes up. And what you could do is, or what I like to do, is to actually change the colors to make it a little bit easier to read. So I like changing the MACD. I'll keep that as blue, but I will bring up the thickness of the line a little bit, and I'll change the signal line to orange, and I will bring that up in the thickness as well. And this makes it just easier to see. So there are a few components to the MACD. There is the histogram right here. There is the 12-day exponential moving average, which right here is the blue line, and this line is a little bit more jagged. And then there is the 26-day exponential moving average, which is a lot smoother. And what this does is it sort of lags a little bit behind the 12-day. And this line right here, depending on whether something goes above it or below it, that is a good time to either buy or to sell. And when you look at the bars, you could see that when it rises up, the blue line is above the bar, and when the bars dip below, that is when the blue 12-day exponential moving average moves below the orange line. And every time the lines move across each other, that is called a MACD cross, and that indicates a possible time to either buy or sell the coin. And the reason why a MACD crossing indicates to buy or sell is because many times it indicates that the market for the particular coin or the market in general is either bearish and negative or going down, or bullish and positive or going up. So there's really only two things that could happen in regards to this line right here. The signal line could either cross from underneath of it, which you could see it does right here, or it could cross from on top of it, which is what it does right here and what it does right here. So when the signal line, which is the smooth orange line right here, crosses over from underneath, that is a bearish signal. That means that the market is probably going to be going down. and the longer it stays on top of it, the longer the bearish signal is. So right when it crossed from underneath of it, that's a sign that it's probably going to take a turn for the worse and go down. And you could see that's exactly what happened. It started going down. And as it continued to stay on top of the line, the price continued to go down. The longer the signal line stays on top of the MACD, or the longer the 26 exponential moving average stays on top of the 12-day, that is a signal of a bearish market. And you could see it has been a pretty bearish market lately. However, right here, the signal line crosses from on top and goes underneath. And it's been underneath for quite a little while now, so it might be a bullish market. However, there's always the false flags, and you have to be careful and put everything from what this looks like to what the news is to your general gut feelings together and determine if you think it's a good time to buy or to sell. But what you could do is you could use this as a strategy on whether or not to buy or sell. So let's say that you saw that the signal line crossed over here and it stayed underneath the MACD, the 12-day, for quite a little while. You might be thinking, okay, well, this looks like a pretty bullish market to me, so I'm gonna buy in right here because it's already been underneath of here for quite a while. Then you could ride this up, and you could see right here that it has ridden up, and then you could sell it right when it starts to cross over again, which happened right here. And then you could say, okay, I'm going to sell it right now, and I'm just going to wait until it crosses over again, which happened right here, although that did not last very long, which is why you need to take everything else into consideration as well, because it did cross over again right here and went right back into its bearish turn. So when there's a crossover like this, that might be a good time to exit the trade and go and hedge your bets and put it into something else. And when it crosses over right here, that might be a good time to enter the trade. And then you could just make sure that it continues to rise up until it crosses, and then you'll have to be a little bit more concerned. Do I stay in it? Do I enter it? Do I leave it? Now, like I mentioned before, the longer this signal line is underneath the MACD, the better signal it has that it is a bullish market. And the longer the signal line is above the MACD, the stronger signal that it is a bearish market. And doing this is a great strategy because it gives you a more longer term viewpoint of where the coin is heading, so you're not so worried or anxious, if something doesn't happen in an hour or a day or two. So it really helps with more swing trading type of trades. And then the last thing to talk about when it comes to the MACD is the histogram right here. These are the bars, and this is also another indicator of whether or not it's a good time to buy or sell. And the thing is that you could look for M's and W's, and this is what I mean by M's and W's. So if there's an M, that's usually a good indicator that you should sell. So here is an M, and if there's a W, that's usually a good indicator that you should buy because it's about to turn bullish. And you could see the W came, and then all of a sudden now it turned a little bit bullish. But what happened right after that, it went bearish again, and there was another W. Now, normally it turns bullish again. However, that did not happen. Normally after a W, it turns bullish. That doesn't always happen, but a lot of times it does. So you might also want to look to see if there was an M or a W that occurred, because usually that signals that the crossover is about to happen. And like I said, here's the M, and then you could see that the signal line crosses over from underneath of it, and that is a bearish signal. And look at what happened. It went bearish and it dropped down. Same thing happened right here. But also, as you can see, this isn't always the case. And that's why most people just like to use this as the bigger indicator as opposed to the M's and the W's. However, this is another tool that you could look at to just get another indicator. And the reason why this is the way it is because these lines just signal the divergence, or how far away the two lines, the signal line and the MACD, are from one another. So as it gets closer and closer and closer, that's a signal that it's probably going to turn either bearish like it did right here, or bullish like it did right here. Okay, so that was the MACD indicator. If you thought that this was helpful or useful, give this video a thumbs up. Be sure to subscribe. Lots more videos coming your way. And if you want to know more about Bitcoin and cryptocurrency and everything like that, I do have a free masterclass for you below that you could sign up to. It tells you all about what Bitcoin, Ethereum, blockchain technology, what it is. Otherwise, let's get to the moon together. I'll see you in the next video. Peace out. Bye.